The Central Bank of Nigeria plans to issue 2.2 trillion naira in T-bills in the fourth quarter of this year. Now, for the bond side, improved bids are skewed towards the long-end maturities, with emphasis on the 2053 bond. Traders at Access Bank expect the bullish momentum to wane following the OMO auction debit for this week. Senator Audu, Treasury Team Member at Access Bank, joins me now for more market movement. Senator, thanks a lot for joining us on the show today. Now, we're seeing no sales recorded on the 91-day and 175-day bills. Walk us through the outcome of this week's OMO auction, liquidity levels, and how you see things panning out going forward with this T-bills issuance notice.
Thanks, David. Thanks for having me. So as rightly said, the market liquidity levels have been quite high. To give you some color, yesterday we saw liquidity figures open at 1.2 trillion naira in the green, positive. So the CBN had to come in and conduct an OMO auction to mop up this excess liquidity in the market. And what we saw was that the CBN has come in on consecutive days. We saw the CBN come in on Monday and on Tuesday to conduct consecutive OMO auctions. At the auction yesterday, the CBN sold 758 billion, all on the long tenured OMO bill. We saw rates on that long tenured bill close 2 basis points lower at 21.87%. At the auction on Monday, the CBN had sold about 869 billion across all three maturities offered at that auction, and we saw rates close at 21.89% at that auction. Opening today, liquidity figures have declined as a result of those consecutive auctions, and we saw market liquidity figures open today at 776 billion.
Yeah. And in the last few hours as well now, we've continued to digest the FX turnover figure we had for July. We've also looked at how much of remittance inflows have come through. But irrespective of all of these, the naira still trades near 1,600 naira despite all of the interventions to help prop up the naira. What's your take on how the local currency continues to fare against the greenback?
Okay, so we've begun to see some reversals in the FX rate, especially following that significant retail auction that the CBN conducted some weeks back. At that auction, the CBN sold about $815 million across very many banks. The circular was released as to how those funds were utilized by the various parties demanding FX at that auction. However, recently we've started to see rates trend upwards again, and this largely as a result of the fact that the demand in the FX market has continued to outweigh the supply. As rightly said, at the FX rate, we saw it close yesterday at 1,602 naira 56 kobo, which was a depreciation of 4 naira 52 kobo from the previous day. Going forward, we haven't seen the CBN intervene since that significant retail auction, but we might see the CBN revisit its interventions as these rates continue to trend upwards.
And schools are also resuming as well now, so the demand pressure will definitely intensify, wouldn't you say?
Definitely. So as schools are resuming, and as we know, many Nigerian schools abroad, so this would of course result in an increase in the FX demand. But as we've seen the CBN do time and time again, whenever these significant demand, this significant demand is expected to come into the market, we've seen the CBN proactively intervene through different segments in the market.
Well, we still expect, going by the CBN Business Expectation Survey, that the naira will fare better against the greenback in the next 6 months. For now, we'll still see things trade at about the same level, but we'll leave the conversation here for now, Senator. Thank you so much for your time at the show today. That was Senator Audu, Treasury Team Member at Access Bank.